Welcome aboard on an eye-opening journey into the intriguing world of the stock market. In this video, we'll unravel the mystery surrounding stock trading and investing, making it as simple as pie. From the basics to the nitty-gritty, you're about to become a pro at mastering the art of trading and investing in the stock market. Getting to know the stock market. Imagine for a moment that the stock market is like a bustling marketplace, buzzing with activity and opportunities. But here's the twist: instead of buying everyday items like groceries or gadgets, you're entering this marketplace to purchase something unique: tiny pieces of companies. Yes, you heard that right. These are what we call shares. Now, think of these shares as magical tokens. When you own these tokens, you're not just a spectator, you become a part owner of the company itself. It's like being granted a backstage pass to the workings of your favorite band. And just like that band's success brings you joy, owning shares in a company allows you to share in their profits. Imagine it as owning a slice of a delicious pizza. When the pizzeria does well and serves up more slices, you get a slice of the profits too. Now, companies are a bit like that pizza joint. They want to expand, innovate, and create awesome things. To make this happen, they offer these slices of ownership, shares, to the public through the stock market. So, in essence, the stock market serves as the grand stage where people from all walks of life come together to trade these ownership slices. Some are buying, some are selling, and some are just watching the show. It's a vibrant arena where dreams, ideas, and investments collide, shaping the future of companies and, in turn, potentially shaping your financial future too. Remember, when you own those shares, you're not just holding a piece of paper, you're holding a piece of a company's story. As you journey through the stock market landscape, keep this analogy in mind. Just as you choose your pizza toppings wisely, you'll make thoughtful choices about the companies you invest in. Whether you're dreaming big or aiming for steady growth, the stock market offers you a piece of the action, a slice of ownership, and a chance to be a part of something greater. So, as you step into the stock market, think of it as a marketplace of dreams, where you can own a piece of the future, one share at a time. Types of stocks and smart ways to invest. Alright, let's zoom in on the world of stocks and explore the different flavors they come in. Imagine strolling through a candy store, but instead of candies, you're surrounded by stocks, each with its own unique taste and potential. Common stocks versus preferred stocks. Think of common stocks as the rock stars of the stock market. When you own these, you're not just a regular fan, you're a part of the inner circle. You get to have a say in important decisions, like choosing the setlist for the concert. If the company decides to distribute dividends, a portion of their profits, you're in line to receive your share, just like a backstage pass to exclusive treats. On the other hand, we have preferred stocks. These are like VIP tickets. You might not have as much say in the band's decisions, but you're first in line when it comes to getting those sweet dividend treats. If the company goes through a rough patch, preferred stockholders are often prioritized when it's dividend time. It's like having your own special entrance to the concert. Investment strategies. Alright, let's talk strategy. It's like picking the candies you want in your bag. First up, we've got the value investing strategy. Imagine you're at a flea market, and you spot a rare comic book selling for a bargain. You know it's worth way more. That's value investing, finding stocks that you believe are undervalued, with the potential to rise in the future. It's like getting a treasure map and hunting for golden opportunities. Now, picture a plant growing into a mighty tree. That's growth investing. You're not after immediate rewards, you're nurturing your investment, letting it grow over time. You might pick a young sapling of a company with innovative ideas and wait for it to bloom into something spectacular. Last but not least, we've got dividend investing. Imagine you're at a candy store, and the owner gives you free candies regularly, just because you're a loyal customer. That's dividends. Some companies share a portion of their profits with shareholders. So, you're not just waiting for the candy to grow, you're also getting some treats along the way. Now, here's the sweet part. You don't have to pick just one strategy. You can mix and match, creating your own candy assortment. Some value stocks, a bit of growth, and a sprinkle of dividends. The choice is yours. As you navigate the world of stocks and investment strategies, remember that just like in the candy store, it's about finding what suits your taste. Are you craving immediate rewards, or are you in for the long haul? Whatever you choose, the stock market offers you a buffet of options, each with its own unique flavor. So, go ahead, craft your investment strategy, and let your stock portfolio be a reflection of your financial goals and dreams. The how-to of buying and selling stocks. Alright, buckle up, because we're about to take a thrilling ride into the world of buying and selling stocks. Think of it as getting a backstage pass to the concert. You're right there in the action, making things happen. Your personal stock shopper, the brokerage account. Imagine you're shopping for new sneakers online. You need a platform to browse, compare, and make a purchase, right? Well, the stock market is no different. To buy and sell stocks, you need a brokerage account, your personal gateway to the stock market. Online brokerage platforms are like your favorite online stores. They offer you a range of options, from sneakers to stocks. They allow you to place orders, track your purchases, and manage your portfolio. Plus, they often come with tools and resources to help you make informed decisions. Placing your orders, market, limit, stop. Now, let's talk about how you actually get your hands on those ownership slices. It's like ordering your favorite pizza, but with a twist. We've got 3 types of orders on the menu. Market order. This is like telling the waiter, "I'll take whatever pizza you're serving right now." When you place a market order, you're buying or selling at the current market price. Quick and straightforward. Limit order. Imagine you walk into a pizza place, and they have a special deal of the day. You decide you'll only buy if the price is under $10. That's a limit order. You set a specific price, and your order only goes through if the stock hits that price or better. Stop order, stop loss order. Here's where things get interesting. Imagine you're at the pizza joint, and you've had enough slices. You tell your friend, "If I eat one more slice, stop me." A stop order is kinda like that. You set a price, the stop price, and if the stock hits that price, it triggers an order to sell. It's like having a safety net to prevent big losses. Embrace the roller coaster, volatility and price changes. Now, let's talk about the heartbeats of the stock market, volatility and price changes. Think of stocks as candy prices that go up and down depending on what people are willing to pay. If everyone's talking about a new candy, its price might shoot up. But if there's a rumor that the factory burned down, the price might drop. Company news, economic reports, and market sentiment all come together to influence these price swings. It's like a real-life soap opera, drama, excitement, and unexpected turns. So, how do you navigate this roller coaster? Well, remember that stock prices are like those candies. They can be sweet or sour. It's all about staying informed, keeping an eye on trends, and making informed decisions. Don't let short-term ups and downs scare you. Just like a roller coaster, the thrill is in the journey, not just the destination. Congratulations, you've just taken a whirlwind tour of the thrilling world of buying and selling stocks. You've got your personal stock shopper, the brokerage account, you know how to place orders like a pro, and you're ready to ride the roller coaster of stock price changes. Think of the stock market as your amusement park of financial opportunities. You've got the tools, the knowledge, and the power to make informed decisions. So hop on, enjoy the ride, and let your investment journey be a thrilling adventure of calculated risks and potential rewards. What makes stock prices jump and dive? Alright, get ready to unravel the captivating drama behind stock price movements. Just like a theater production, the stock market has its cast of characters, each playing a role in the grand performance of price changes. The tug-of-war between buyers and sellers. Imagine a tug-of-war match between two teams, the buyers and the sellers. The price of a stock is the rope they're pulling. When more people want to buy a stock, demand is high, the price goes up. It's like a bidding war at an auction, everyone wants a piece, and they're willing to pay more. On the flip side, when there are more sellers than buyers, demand is low, the price drops. It's like a clearance sale, everyone's trying to get rid of their items, so they're willing to accept lower prices. The power of supply and demand. Now, let's talk supply and demand. Imagine you have a limited edition candy that everyone's talking about. Suddenly, everyone wants it, and the price shoots up. But if there's an oversupply of that candy, the price drops because there's more than enough to go around. The same principle applies to stocks. Positive news about a company can trigger a surge in demand, causing the price to rise. However, negative news or disappointing earnings reports can lead to an oversupply of stocks, resulting in a price drop. The influence of news and market sentiment. Picture this: you're at a party, and someone starts spreading juicy gossip. Soon, everyone's talking about it, and the mood changes. The stock market works in a similar way. News, whether it's about a company's earnings, a new product launch, or a global event, can have a huge impact on stock prices. Market sentiment is like the collective mood of investors. If everyone's feeling optimistic, it's like a sunny day at the park. Prices rise. But if fear or uncertainty takes over, it's like a stormy night. Prices drop. The earnings roller coaster. Imagine a candy factory that announces record-breaking sales. People will be excited, right? They might even expect more sales in the future. It's the same with stocks. When a company reports strong earnings or growth prospects, investors get excited and buy more shares, driving up the price. Conversely, if a company's earnings disappoint or it faces challenges, investors might get worried and start selling. It's like a roller coaster of emotions, with prices rising and falling based on the twists and turns of a company's financial performance. Conclusion. And there you have it, the thrilling tale of what makes stock prices jump and dive. Just like a captivating story, the stock market's ups and downs are driven by a cast of factors, from the tug-of-war between buyers and sellers to the influence of news and market sentiment. It's a dynamic dance where every move matters. As you navigate this ever-changing landscape, keep your eyes peeled for the cues, positive and negative news, market trends, and the pulse of investor sentiment. Remember, the stock market is a stage where the drama unfolds, but armed with knowledge, you're not just a spectator, you're an informed participant in the grand narrative of stock price movements. Riding the waves of risk and reward. Get ready to surf the waves of risk and reward as we delve into the thrilling world of the stock market's highs and lows. Think of it as an adventure, where you're the captain of your financial ship, navigating through uncharted waters. The risk-return trade-off. Imagine you're considering a new candy. One promises a burst of flavors, but it might be sour. The other is a familiar favorite, safe but not as exciting. In the stock market, it's all about the risk-return trade-off. Higher potential returns often come with higher risks, just like the promise of a tastier candy might be accompanied by a bit of uncertainty. Stocks of well-established companies might offer steady returns, but they might not skyrocket. On the other hand, investing in a smaller, growing company could lead to bigger gains, but it's riskier, like trying an exotic candy you've never tasted before. Diversification. Don't put all your eggs in one basket. Imagine you're juggling multiple types of candies. If one falls, you won't be left empty-handed. That's the essence of diversification. Instead of investing all your money in one stock, you spread it across different companies and sectors. It's like having a candy buffet, ensuring that if one candy disappoints, others might shine. Diversification helps you manage risk. If a particular sector faces challenges, say, the chocolate industry takes a hit, your other investments, like fruity candies or chewy treats, can help balance things out. Long-term versus short-term. patience pays off. Imagine you plant a fruit tree. It takes time to grow and bear fruit, but once it does, you can enjoy the harvest for years. The stock market works in a similar way. While short-term price fluctuations can be like changing weather, long-term investing is about nurturing your investments over time. Timing the market, like predicting the rain, can be tricky. Instead, focus on the long term. History shows that the stock market generally trends upward over time, despite occasional storms. Emotional intelligence, your secret weapon. Imagine a candy shop with a variety of flavors. Some days you might crave sweet, while other days you prefer something tangy. Similarly, emotions play a role in investing. Greed and fear can cloud your judgment, leading to impulsive decisions. Developing emotional intelligence is like becoming a candy connoisseur. It's about understanding your emotions, managing them, and making rational choices. Remember, in the stock market, being cool-headed is as valuable as having a diversified portfolio. You've just navigated the exhilarating roller coaster of risk and reward in the stock market. It's a journey where calculated risks can lead to sweet rewards, where diversification spreads your investments like a candy buffet, and where long-term patience can yield bountiful results. As you venture further into the world of stocks, embrace the waves of uncertainty with a clear strategy and a steady hand. Just as a skilled surfer rides the waves, you can ride the stock market's peaks and troughs with confidence. So set sail, balance your risks and rewards, and let your financial ship sail towards the horizon of long-term success. There you have it, a crash course in stock market magic. You've learned that stocks are like slices of companies, and the stock market is where you buy and sell those slices. You've got your common and preferred slices, and different strategies to pick the yummiest ones. Plus, you know how to order and the secret sauce behind stock prices. Don't forget to diversify, just like you diversify your candy stash. So go on, dip your toes in the stock market ocean and enjoy the journey to financial deliciousness.